Hey, Robbie, I thought I was approved. My lender told me I was pre-approved. I don't understand what's the difference. Hey, it's Robbie Grove. Of course, I got the lovely Tracey with me from Mortgage Minute Live. Once again, Tracey, thanks for joining
Good
us.
morning.
So we've heard this quite a few times this past couple of weeks. Robbie, I thought I was already approved. I got my pre-approval. What's going on? Tracey, can you kind of walk us through and what's the difference?
Yeah, so there are a few parts of the mortgage underwriting process. So typically you have a pre-qualification, you have a pre-approval, you have a conditional loan approval, and then you have final loan approval. So those often get mixed up and interchanged with each other.
And as she kind of goes through each individual one's got a little bit more bearing in the clasmatic event of buying a house than the other.
Right. So pre-qualification is typically when a borrower submits an application to a loan officer, and the loan officer pulls credit, and it pretty much stops there. So based on the data the borrower put on the application and the credit report, the loan officer will then report back and say, hey, Mr. or Mrs. Borrower, based on the data you put on the application and based on your credit report, it looks like you can qualify for X, and this is what X looks like as far as product, program, down payment, monthly payment, closing costs.
So, and one of the things that's a key point just for folks to remember is just because you're pre-qualified, this is also going off of your data that you put in. And sometimes it's not exactly always accurate when you go to verify, right?
I've had clients put in the completely wrong income a lot. Most people don't know if they need to put net or gross in. Some people don't know really what they make, which is surprising. And then also, buyers don't know how we calculate income from a qualification standpoint either. So, example, if you are on a new job and you're making overtime, like a lot of overtime, if you don't have a history of making overtime and you've only been on this new job for 3 months making overtime, we can't include the overtime.
Yeah.
So it's like it doesn't matter.
I would imagine some things with like per diem and
Commission, yes, bonus, overtime, all of those things. You generally need a decent history of that before you can use it as income, as qualifying income.
So that talks about pre-qualification. The next one is pre-approval process.
Right. So pre-approval is when the borrower submits income and asset documents that support the data on the application. So at that point, we'll cross-reference. We'll look at things like pay stubs, W-2s, maybe tax returns, bank statements, and info on any other homes that they own, properties that they own.
Right.
And then we go through and we cash flow all of that from like a guideline standpoint to determine what is usable, what data from the application is usable for the loan process.
And then from there, we kind of figure out where you are going to land in line for the type of loan product that goes in, correct?
Right. Yeah, that's when we start to really firm those things up. You may have thought that you would have qualified for rural development, for example, but once we start looking at income, we figure out that you're over the income limit for RD. So then we have to go and look at a different product.
Gotcha. So we go from pre-approval to conditional loan approval.
Conditional loan approval is when you are under contract, or if you really have some concerns about income and need a solid cash flow from an actual underwriter. So let's talk about the first option. Let's say you're under contract and we've taken you through the underwriting process. So what the underwriter will do is they will look at everything that we've submitted: income, asset documents, credit report, properties you own, application, and then they'll go through and ask us any questions that they have about your file. Some things we may be able to answer on our own. Some things we may have to get with you on. And also keep in mind, whenever we hit the underwriting process, that's when we order additional services we need on the file. That's when we'll order income breakdowns if they're needed. That's when we'll order fraud guard and some data verify and some things behind the scenes that we don't pull initially, because every single report we pull costs money. So in an effort to not rack up thousands and thousands of dollars in billage per file, we wait until we have a valid file that's going through the underwriting process before we order those things. So some things we don't get until later on.
Which, by the way, this is one of the reasons why there's a difference between pre-approval, condition approval, and final approval.
Right.
So
During the conditional loan approval process, that's when we're ordering title work, appraisal, things like that, reviewing insurance again with the underwriter. So once all of that is reviewed and approved, income, assets, application, credit, other properties owned, title work, appraisal, insurance. Once all of that is reviewed by underwriting and approved by underwriting, then you get final loan approval.
And just so you know, conditions are title, lending, title, appraisal, things that the underwriters are going to ask for, whether it's explanation, could be letters, could be, sometimes it feels, I hear this joke all the time from buyers, man, I feel like y'all want my kidney. But I mean, one of the things they're doing, they're lending hundreds of thousands of dollars, and they've got to make sure that they do the necessary things that are out there to make sure that the borrower is capable to be able to get their money back, of course, with interest. So,
right. And it takes time. I've had a lot of, I think we're all used to instant gratification, especially with technology being what it is today.
Amazon world today, right?
Yes. Everybody, the second I order an appraisal, everybody's asking me like the same day, when is the appraiser going to go out? What is my value? And I'm like, we have to give all of those people adequate time to do those jobs. And if you rush somebody, that's when poor performance happens, right? You don't want to rush appraisal work and things like that, because that's when oversight happens, mistakes happen, and we have to work within a reasonable time frame for that. Also, keep in mind, when you're in the underwriting approval process, you may submit, or we may submit your answers and findings back to underwriting to answer their questions. That could lead to more questions, especially on very extensive files that have a lot of moving pieces, a lot of assets, a lot of different companies owned, a lot of different real estate owned. Sometimes that can lead to 1, 2, maybe even 3 underwrites going back and forth with the underwriter to try and clear those things up.
Yep.
It's not as common, but in those more complicated files, it definitely happens.
I would imagine it's probably pretty common in tax returns that look like encyclopedias. Right?
Yes. And most of those people typically have more than one business tax return on top of their personal.
And for Gen Zers, encyclopedias are really thick books that used to be able to study way back in the day. It's not just Wikipedia, but anyway, I digress. We go from the conditional loan approval into final loan approval, and final loan approval is what we really love to hear. That's those gorgeous words, I'm hoping, clear to close.
Clear to close. Yeah. So when we get the clear to close, that's when we prepare your file with our closing department and with the title company. We prepare your closing documents that you'll sign at the closing table and your closing disclosure. That closing disclosure has to be sent and received by you 3 business days before closing. Saturdays do count in that process. Sundays do not. So you have to be in receipt of that 3 days before closing in order to close on X date. And that is a federal guideline. A lot of what we do are federal guidelines, and there's no bending of those rules.
Those are non-negotiables.
Non-negotiables. So my best advice, if you're in this process, is to trust the process, be patient. Asking questions is fine, but keep in mind the golden rule.
Yeah, them that make the goal.
He who has the gold makes the rules. So there's no buck in the system. Just
Absolutely.
be patient and be cooperative, and that's how you can experience the best overall process.
You get to the end, to the finish line. I know, for what it's worth, we all want to be able to make it down into the closing to be able to get there, because ironically, this is how we feed our families too. So we know that we want to be able to get into that house, and obviously we want you guys to get into that house too, because at the end of the day, we get our little prize for
no one wants you to close more than you, the seller, and the 2 of us, because none of us get what we want at the end of the day if you don't go to closing.
Yeah.
So
I lovingly joke that we eat what we kill, and if we don't kill, we don't eat. So we want to make sure that you guys get in and that you're happy and that things go through, but we can't skip federal guidelines, and we've got to be able to run through the process to make sure that things are right. Because like Tracey said, then they make the gold, make the rules. So we just got to make sure we follow those rules to be able to get you to closing day.
Yep. And that's it.
So next time, if you guys have any questions about any of the other things that happen to be running through, we'd love to be able to take those. Make sure you shoot us a direct message. You can comment on this post right here. Would love to hear from you. As always, for Mortgage Minute Live, this is Tracey and Robbie, and we will see you next week.